All right, guys, it's Paul Singh, the Market Speculator, with the trade report for Monday, May 13th, 2019. Not so good for the market. As we can see here, the big news is China announces tariff retaliation to take effect June 1st. Stocks tumble, treasuries rally on China tariffs. So trade war escalates, not what we want to see from the bullish perspective. Good that we're in no current positions right now. Good that we did not take this hammer reversal signal on Friday. I got a lot of emails about this over the weekend. Some of you took this signal here. I've been very cautious. We've been talking about this. Now, normally when I see something like this, I would jump on it. This is a kind of a slam dunk long, but when you have no edge in the market because everything is reactionary and news-based, when something like this goes on, it's best to wait it out. And if that means we don't make any trades for a while, we don't make any trades for a while. Usually I like to be at least in a few positions. But right now, as a swing trader, if you don't have an edge, just don't trade. It's as simple as that. Everything is flowing with the market. If you go through all of my lists here, it's basically a sea of red. And what you see green here is oil, VIX, inverse ETFs, and gold outside of Roku and Boom. We could pull up the IBD 50 here. This is their top 50 stocks. Every one of them is red today. So obviously this hammer was a fake out. And if we really think about what the news was, there was no good news coming out of the China talks. It was just Trump tweeting out that he was positive about it. And then the markets, for some reason, like that. But over the weekend, not good news. Markets tumbling here. Now the question is, do we go short? And that's interesting. We could take a short position here. It's just so extended to the downside. It's tough to do. I think the best bet is to really just sit on your hands and wait for the potential bounce or secondary move. We're already down 2% today. So it's tough to get a good risk reward in here, especially with the market so volatile and you have to use really loose stops. Best bet is to just wait it out. If you want to put on a short, low risk short, it'd be okay. One or two positions, you could lose a little bit. That's fine. And maybe I'll do that by the end of the day. I might take a stab here and there at a potential short. Now, if the market reverses, I'll probably look at the news and see what it's based on. If there's some kind of really good agreement or something like that, then maybe we jump in. So right now, the go-to move is to just sit and do nothing. And if we get something intraday that changes that perspective, we'll talk about that. But for now, best bet, stay out of the market, stay in cash. I'm usually not, even when I get very conservative, I'm usually in one or two positions. But now I think the best bet is to wait it out. We can go through this. We're going to see the same thing everywhere. Qs, hammer failing, getting crushed. Maybe we take a little stab here and short the Qs as they're breaking the 50-day moving average. IWM breaking down below, and maybe we do that with TNA or IWM as well. Now oil is popping today, crossing over the 9. I'm still going to be cautious with oil. China getting crushed, semiconductors getting crushed, financials getting crushed. I could just use a tape recorder here. Financials do seem to be holding up a little better, as are still home builders right at the 50-day moving average. And if I pull up one of my watch lists here, you'll see that even though they're red, KBH, this is a home builder stock, and Toll home builder stock are actually holding up pretty good in comparison to a lot of the stocks. Let's look at the FANG stocks. Facebook testing this level here. So this was a key level for us on Facebook. Let's see if that level holds after a good earnings. Does it hold the gap fill? Netflix getting crushed, but coming into its 200-day moving average. Let's see how it reacts to that level. Google breaking down below its 50-day moving average. Amazon right at gap down here, right to the 50-day moving average, and Apple getting crushed on, Apple's really impacted by China here and getting crushed after a really good earnings season. So everything here is really market dependent. So we're going to keep watching the market. Again, don't get more volatile as the market gets more volatile. Be cautious. If you want to take a stab or two here and there, that's fine. Remember, being in cash, you're probably beating just about everyone, because most people who are over trading right now are not doing well. So just sit on your hands. If you're trading like pretty close to what I am, we're up 14, 15% on the year. The market right now is down to about 12%. So as the market goes down, you're actually beating the market more and more by sitting here doing nothing. So that's it today. If there's something that changes intraday, I will let you guys know. Otherwise, if nothing changes, I'll see you guys tomorrow morning or this evening, potentially with maybe a stab at a short. I'm still thinking about it.